All right, happy Friday. Hit it monkey update. I kind of want to do this real time. The market's open. It's about oh my god, it's like 5:15 in the morning Hawaii time. It's 8:15 California time and 10:15 Chicago. Anyway, so here we go. Here's what I wanted to show you folks. Here's the SPY year to date, right? As you can see, the market's up over 1.5%. But more importantly, is the vol crush. Okay, so remember last night I talked about where the market opened year to date and how I think they wanna hold this because that way they can show a profit. So if you were a money manager and you saw this maybe like right around, I'll zoom in like right around here. Okay, so let's say you're a money manager and you see on balance volume drop, it went red, which means more sellers than buyers, and you said, okay, let's get ready just in case we have to exit. And you don't exit, you stay in, you're in. It's still red, and over here you notice the stochastic went red here. So red here and red here. It's time to sell. So you sold here, right? Because why? Well, the year started off here. This pink line right here is where we started off, at the beginning of the year. You want to keep your profits, right? If you're managing someone else's money, you want to show you made a return. Okay? So now your profit is up here, and this is where the market opened at the beginning of the year. You take your profits, right? So you made some money. You can show you made some money. All right. So let's say you retreat to cash and you're waiting. Oh my God, the market drop. You're still waiting. See, look, there's no buy signals here, right? They're all still red, 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 red. But now it drops all the way down to here. Okay, and so we got to hold this because if the market goes negative, there are a lot of people who didn't get out, and now they want to, hold this line. So that's why I was worried about, not worried, but that's what I was thinking last night. But then you got sellers and buyers as well. So I'm thinking to hold this tight range right here. Okay. But more importantly, as you can see, slow stochastic broke above 20 right here. Okay. And this is kind of coming, the gap between here and here is narrowing. Okay, if you look at the basic, the slow stochastic everyone else looks at, the 25.3 sitting right here. Okay, as you can see, look at these the red and yellow number, and I'll move it to over here. The red is at 27.51, and the slow is at 20.9. So you want the red higher than the yellow, because when the red is higher than the yellow, it's a bullish trend, it's going up. When the red is below the yellow, it's a bearish trend. So whichever direction you want. I just wanted to I just wanted this though. This out of all that, none of this matters except this. Vol collapse. Remember I said if you look back in other videos, they usually don't 100% Ivy rank held last time for 1 day. Sure enough, right here, see? On this day, 10/13, Ivy rank right here it reached 100. Okay? The very next day, what? Dropped. Then it popped back up. The market had that big down day, right? Okay? Big down day that day, right? Huge. Ivy rank popped to 100. Yesterday retreated a little bit, right? And then today it's popping a little bit, right? We're almost back down to 55. So here's my point. Remember when I was selling premium all along here? Okay, when it got to like 35, and then Ivy rank got to 50, and we don't usually see that very much. And then when you start selling Ivy rank, and then well, I did a golden gecko, of course, right? So I have a range to be corrected. But IB rank rises. If you sell premium at 50 and the IB rank rises to 100, you're going to be losing money. Okay. The good news is that look what happens, right? IB rank reverts to the mean. So anything you sold, and then of course if you sold more on the way up and you put on more positions on the way up, and then IB rank collapses, that's where you make all your money. Okay, so that's when you manage your winners and take your profits. So that's what I did. Remember, I showed you guys I rolled my positions. So let's look at Dole real quick. Right here's my Dole. My worst position is my here right here on the top. I have a 185 put and a 185 put spread. So I sold the 185 put, which means I'm betting that the SPY will stay above 185. Okay, and I covered my ass with the 177.5 wide put, but that's a wide spread. Okay, this is basically a naked put. So for the long until today, this position was losing money. Okay, now it's up 111 bucks. These are all single lots. Remember, this is a learning trade. It's just a single lot, man. So that's fine, right? Now I have another one. Okay, remember, and it expires the same day, October 31st, weekly, and I think it's down here, but it's the 190 put. Wait, where is it? No, that ain't it. Oh, right here. Look. The 170, the 190, 172. This is really a naked put basically, right? So these are one half of the golden gecko. I'm down 107. So my worst positions right now, if I close them today, I actually I scratch, right? I break even. So I can actually get out and not lose money, scratch, and still have all these other positions on that are way farther away. Look, my 167 put, right? But then in November. Okay, so that's why I'm not making as money. There's so much time left. But I love my positions. You know what I mean? Because if vol collapse more, these will expire. Great. So that's what I mean. Remember, I rode. If you looked, I rolled this down. I think at a 192, I rolled it down to the 190. Then I let it sit. This one right here, it's still 185, but I rolled it. It expired. Actually, there was a mistake. I shouldn't have moved it, but oh well. Remember 2 days ago, I rolled this 185. It expires. It's supposed to expire tomorrow, and I rolled it out to the end of the week because it got to 183 or something like that, and I didn't know. Okay, so perfect. You guys can look back and see what I did, like 2 posts up or whatever. But I'm gonna hold it now because and if you go to settings over here, you can go show gain and losses percentages or whatever. But the problem is when I have so many positions on, it'll show my whole SPY position as a percentage, okay? But it won't show my individual ones as a percentage. If you wanted to look at that individual legs as a percentage, I don't think you can do that here. But if you go to Thinkorswim, you can do that. Okay, so I don't know. Let me try here. Yeah, see, here's my. Whoa, where is it? Yeah, here's my SPY position right here. Okay, so where is it? You can look at percentage. See, like I'm down 48% in that 191, and where's that other one? Oh, right here, the 185 put. Okay, but I'm up 17% in that one. So look, I can still make 25% of my max profit. Here. So I personally think the market wants to rally, which is why I held those positions. Okay. So I mean, there's no right or wrong. I mean, it's more important how you manage your money versus or how you. Okay, the most important thing you're going to learn about trading is your decision making abilities. Okay, because I have a high tolerance for risk, and this is just chump change. I'm sure a lot of your accounts are bigger than this, but like I said, this is an IRA account and it's a tasty bite-sized account, so I made it small on purpose. So everything I wanted to do, anybody could do. Okay, you can do 5 wide strikes, or you can do mini golden geckos, or you can do regular golden geckos. But anyway, let me change this real quick. So that's kind of what I wanted um, to show you guys real quick as far as that goes. Let me change this to yellow, maybe. Maybe easier to see. Okay, so I think they want to hold this line. I think it might even bounce off a couple times or whatever, but I think it'll bounce up. And see this? I told you last night. See this? Wait, can I highlight it? Yeah. See that dashed cyan? Here's the Bollinger Band, right? The top, the bottom, but the middle is dashed. Okay, I think it's gonna hug along this line, that line. Okay, and I think vol will collapse. Now, if this volatility collapse, all my other positions will come in. Oh, wait, I think it's easier to look at it like this. As vol collapsed, and it went from, wait, hold on, where did it go? Yeah, volatility is contracted down to what? 56, almost half, right? Okay, so volatility has come in real nicely. Oh, and look at your ADX crossover right here, this bottom one. Okay, it's at 33. If this starts to decrease further, and this number gets lower, look for the market. That's signaling that this downward trend is getting weaker, and it's and doesn't mean it won't go lower, but it should be bouncing up higher. So that's what I'm watching. Okay, again, that's just your ADX crossover. Okay, so again, once your volatility starts coming in all these other positions, okay, look, this is my mess, right? But I focus on the SPY. Why? Because I think it's easier for beginners, traders, when you're beginning to focus on one underlying and you get to understand it more. And then once you get better, you can go branch off to other stuff, like try earnings plays. You know what? I didn't do any earnings plays because I wanted to stick with this, especially for the videos, so you folks understand what I'm looking at. And another reason why is you get so good at it, and it's such a liquid market, you get very, very, very I guess what's the word? You become almost an expert in that field in your one little world. But this one little world is what makes Karen the super trader all her money. And the important thing is, if you can't manage a golden gecko, you have no business putting on anything more complicated. If you can't manage this, what makes you think you can manage a pairs trade, a ratio, or a calendar spread? So you need to be able to learn how to manage this, especially when position moves against you. You need to know how to cut your losses. You need to know, when to cut and run and when to hold for duration. Okay, a lot of that has to do with your ability to stomach risk or your order entry, meaning all your risk is done when you place your order in. If you can't handle these spreads being this wide like this, if you can handle like a 12-point wide spread, don't do it. Do sell the 185 and buy the 180 like this. Okay, so let's say you're bullish right now. I go to SPY, choose a strategy, right? Go to Iron Condor. Let's put on a Golden Gecko. But keep your width 5 strikes apart. Watch. Okay? Now look, you can still make a nice 66 cents, right? You can, actually I could clear those positions, but hold on. Let's say all these white flags bother you. You can click on settings and you can, if I uncheck these, they'll go away. Okay, so you can see, basically an easier screen. It's up to you. But I'm gonna leave those on. Well, I'll leave it off for now. Sorry. Anyway, look, you can collect 66 cents. I don't know if you have positions on here or not, but you have a 70% chance of not losing money. And I don't know why this is like this. This is so wrong. I think that's because I've been doing a bunch of crap. But anyway, watch what happens when I widen this out to the the two deviation. I make it a real golden gecko. See, that's wrong. So I don't know what's going on with it right now. I think it must be a lot of activity where something's wrong. Oh wait, let's try to refresh somehow. Let's clear. Where's the refresh button? There is no refresh button, right? Oh, here it is. Okay, so let's refresh account information right here. And then let's try to put another position on, the same position on, and go. And 66 cents. No, I don't know what's going on with that because that's not true. But anyway, as volatility, now volatility is still above 50. Okay, so you can still put on positions if you haven't put on any positions, but there's a little bit more risk there because it could spike up again. All right, so just trade. Keep them narrow like this. If you have less capital, it limits your losses. I know Dole doesn't show that right now, but this is a normal golden gecko. I can collect more money, but my max loss could be worse. So that's why I know that's wrong. And anyway, so that's it. So like I said, I'll do videos when I can. I don't know if they're getting that many views or not, but if I can help, just do a shout box and I'll do a video based on your questions or whatever it is. All right, so that's what I'm looking at today. So in real time, look, the market's at, where's the market? SPY is at 189, 190. My 185 position is fine. If that gets to 25 to 50% of max profit, I'm going to take it on that 185 position I have right here. But the 190 put I have to, wait a minute, where is it? Right here. I'm still down 50%. Okay, so what that means is, look, I collected $1.72. Wait, right? I did, right? I collected $1. Hold on, let me look at the other one. Might be easier. Yeah. I collected $1.72, and right now I'm down $2, or I collected $170. I'm now $281. I don't like to technically. I don't have any good to cancel orders in here. Okay. Actually, that's a good thing I should bring up. I would have only lost 172 here, and I think I would have made more money, but we'll see. But anyway, look, on this vertical spread, I'm up 109. This one, like, I'm down. Well, I'm sorry, I'm down 109 here for this 190 put spread, and I'm up 109 here. So I could close these two out, and it's a wash, no stress. I'm gonna hang on and see what happens from here, and we'll go from there. Right, I just kind of want to give you a heads up about what I look like, what I look at, and how I do things. If that helps, you guys have a great day, and I'll post some updates later.